Hope everyone's doing well. This video as hopefully a simple demonstration of a breakdown of context, and what I think is really interesting for this one is when the market does something that I would classify as a surprise, a low probability event, the unexpected event, something should have happened and it didn't happen. It's that kind of thing that I want to focus on in this video, and I think it's demonstrated beautifully here on this chart. This is the 20th of November 2024, and there's a few things I really like about this chart, and it's no accident that we're up to bar 67 here. This is the area I want to talk about. But to do a brief breakdown of the bars to the left, let's just back up a little bit. We can see the market's been in a broad trading range, big swing up, trendline break, retest, very quick, maybe 3 consecutive sell climaxes down to support. We had this tight trading range on the prior days, open, a breakout, and a bull trend, and this is support, so we come back down and test support. Coming down with enough momentum, the first reversal should fail, but the first reversal was fairly impressive. You'll notice it's a simple leg, meaning there's no spike breaks, no bar pulled back below the low of the prior bar until bar 19, went below 18. Now you can say there are 4 pushes within the leg, and that's true. 1, pause, 2, pause, 3, pause, and 4. You'll also notice we're testing a breakout point, the bar 7 low, bar 8 broke out. There's the breakout point, so we have 4 pushes to the breakout point to the moving average, so resistance here makes sense. You're also still expecting a second leg down of some sort, but strong enough trendline break, you might wonder, are the bulls getting a major reversal? So we have a steep trendline break, and in this case, maybe we get the higher low major trend reversal cluster of support down here. I'm going to use the bar 10 high. You can use the bar 13 low, the 12 low, close, open here. Somewhere in this general area, there's support. And we know that from over here. Maybe the breakout point, bar 3 high. You could also use that one. Support and resistance is not perfect. It's just a field of support between 2 lines in a zone. So maybe it's something like that. This is the support zone. You expect sell-offs to bounce or even reverse when they get to the support, or I say support zone. I'm talking about the buy zone, which is an area of support. The market rallied for a strong leg, 4 pushes to a breakout point in the moving average. You expect probably a couple legs sideways to down after 4 pushes and a test of resistance, and that's exactly what we got. The bears got a breakout, pull back, second leg down. But at this point, the market's in a trading range. Big down, big up, might be a triangle. And what happens to second legs in trading ranges? They often reverse, and you often get second leg traps. So what's the problem with, 24, strong breakout bar, good for the bears, but still testing the buy zone support in a trading range. So here, the bears really need a duplicate bar, another bear bar like 24, closing well below these support lines. This one's a little bit arbitrary, and there's always a way. This is what I find so fascinating about support and resistance computers. There's always a way that it was foreshadowed before. So we have a channel line, and if we draw a parallel to this major low, 24 is breaking out of that trend line. Good for the bears. It's a small breakout, but like I said, at support, they really need follow through. Plus it's leg 2, so possible second leg trap. Is 25 what the bears want to see? No, 25 is a bar that causes give-up bars. 25 is a warning that the bears are not selling. Great bar 24, but context trumps signal bar, so the context is actually better to be buying. 2 legs down after a strong trendline break in an overall trading range, and we're in the buy zone. So 25 is a warning that bears who were short might bail out of a trade, and the bulls can buy the close of 25. Increases the probability or increases the risk of a breakout to the upside on 26. So if you're short, probably better to be quick to get out. So we got the bull breakout. And this one was strong. 3-bar micro channel, 26, 27, 28, clearly breaking above the bear trend line of the triangle. But similar problem as this here, 24, 25, good looking bear bar, bad follow through. It's a second leg down to support. And now you have to wonder, is this a second leg up? 1, pullback. 2, is it a second leg up to resistance? Really strong bull breakout. Looks great for the bulls. But now we're about to find out, do the bulls get another follow through bar, or is there disappointment like bar 25? And it looks like bar 30 was disappointing like 25. Right when the bulls needed strength, break out of the top of the start of the channel for the bears, spiking channel. Now it's 2 legs up to resistance. Bulls need follow through. They get a disappointment bar. Just like the bears got the disappointment bar, 25. The risk is that it leads to a give up. Bears bail out of trades. Bulls buy aggressively, and we rally. Now it's the same but opposite here. 30 might be a sell to close bar. There's probably sell orders at the bar 31 close because we have 2 legs up and we're at the top of a trading range. No matter how strong the breakout looks, when you're in a trading range and it's leg 2 and it's a vacuum to the top of the range, resistance, it doesn't matter how strong the breakout looks. Context trumps everything. So as soon as you start to get hesitation, what's the problem for the bulls? Risk reward. Huge breakout, strong bars, but 1-to-1 is up here. So for a bull to buy here, stop below the breakout, 1 times the risk is all the way up here. And is it logical to put a stop below bar 26? Do you really want to sell below 26 if the market gets there? No, probably not. This is the buy zone. This is support. So better to look to buy down here, which means traders buying here are trading momentum. And 30 is a warning that there's no momentum when there needs to be momentum. Resistance in a trading range. So bulls might bail out of a trade here. Start selling out of longs. Bears can sell aggressively. 2 legs up, top of a trading range, second leg trap. Second leg often looks really strong. We get down this pullback, and then the give up bar, 33. So let me speed it up so we can get to the breakout I actually want to talk about. But this chart, I really like this chart. I've grown to like it. So we're in what might be, it might be a triangle, it might be a bull channel with higher lows. And maybe an overshoot here, undershoot. Maybe you don't draw a parallel. Maybe you draw it like this. In any case, there's a lot of overlap. It's big down, big up. And we know it's a trading range, so the market's in breakout mode. What's really interesting about this chart, though, at this point, yes, this is the biggest breakout on the screen, but this one, to me, is more dominant. This is a stronger breakout than this. But the bears are still looking for a second leg. The bears still want to get down to the bar 11 low, get a second leg down, 1, maybe a low 3 short, and a second leg down to here. So maybe we're starting a second leg for the bears. Bear breakout, bull channel, bear flag. You get the bear breakout and a test of the lows. That's what the bears are hoping for. But at this point, the bulls are hoping this was enough of a trendline break that the breakout mode, the trading range breaks out to the upside. and we get trend reversal. So bear trend, trend line break, trading range, and then eventually the bull breakout. Now look what's happening here. Big up, big down, but the bull breakout bigger and stronger than the bear breakout. Finding buyers. Let's see. Bears here may sell above the last strong bear bar, 24. And because of that, if a bear sells above 24, they get trapped on the bull breakout. What they were hoping would be resistance becomes support. So we test it. We fail to break below, reverse up. We're testing it again on 47 and 51. And we have 3 legs down, 42, 47, 51. Bear breakout, pull back, second leg, pull back, and then leg 3. So this is really a wedge double bottom. And in general, it's going to be better to look to buy here. This is a more of a buy setup, support. Strong bull breakout, deep pullback, but still an open gap. So that's just the tails with the bodies. There's still a body gap open. So you know there's trap traders below. This green box is a buy zone support. You expect when the market tests in this green box, you expect a bounce or a reversal up. Now after 3 legs, what's the significance of 3 legs? Why do we always talk about second legs, third legs, leg 4, late legs? Why don't we take late legs? 49 through 51 is a bear micro channel. What's the difference between 49 through 51 and 30 through 32? They're both 3-bar micro channels. This one is arguably made up of stronger bars. We have a bear bar closing on its low, another one closing on its low, and then another bear bar. This one's sort of a couple of dojis. None of the bars really closing on their low. So why is this a better sell than this? It's because of context. The bars that make up the signal provide hints and information, but the signal itself, for me, if I'm looking at a 3-bar micro channel as a signal, the 3-bar micro channel, like I said, provides information, but the bars to the left, the context, is what's much more important. So like I said back here, strong rally, but testing important magnet, the first pullback, the start of the channel, which often becomes the top of a trading range. When you start to see the market cycle, you know the market behaves well with that. So we come up and test it, and the bulls, something changed here. Bull bar closing on its high for 3 consecutive bars, maybe 4. But then we get a weak doji, 30. And what happened? We tested resistance when the market needed to break out. What happened here? We tested it again and fell again. Buy the closed bulls on 29, disappointed, 30, exit their longs at break even on the close of 29 if they're quick on 31, and then continuing to fall. If you bought here and you did not exit and you held, what are you thinking at this point? You might be thinking, gosh, I hope it gets back to my entry price now. We have a 3-bar micro channel against me. Most 3-bar micro channels get second legs. The first reversal probably going to be minor. Even if we trigger the buy above 32, it's a bad high 1. It's a, again, 3-bar micro channel, bear signal bar. We're at resistance in a trading range, second leg. So you're just hoping we get back up to here. If you're a bull, and we get a give up bar 33. To me, context is better to sell here. And then if we talk about this micro channel, 49 through 51, it's like I said down here. This green box is expected to be support. 51 is testing support. It's also leg 3. And I said, what's the significance of leg 3? That's weak, exhausted traders. So let's think about what happened here. Outside bar for the bears. The rally began with bar 35. It's a weak stop order buy. You're in a trading range. You expect breakout points to close. So it's likely, especially after you see bar 41, we're probably coming back down to the bar 35 high. We got there 42. So we got there in a hurry. Outside down. Weak follow through, but we tested support. You expect a bounce. But is 42 a good buy? No, probably sellers above. You just had this bear outside bar, trapping traders up here. Bulls, 2 pushes up, trapped on 40, just looking for any bounce to exit with a smaller loss. So they might sell 43. The upside might be limited here. 41, 42, probably will get a second leg. We get a low 2 short, low 1, low 2, and now we're testing support once again. So there might be resistance or support. Let's think about bar 42. Or we can keep it on the 35 high. This is a support area. 35 high, 42 low. When the market gets here, we rally. We test it, we rally. We test it again, probably going to rally. Some unfortunate bear sold the low tick of bar 42. And if you sell the low tick of 42 and then you get 43, you're disappointed. And you might sell more, scale in, but if we get back to the 42 low and you're in a trading range environment, you're testing support, you might just exit if it gets back here. So there's probably buyers but down here. And then we tested this support area. This is drawn from the close of 24 to the close of 35. This is a body gap or a negative gap. So 47 tested the top of that negative gap, which is about the close of 35, and rallied. Now at this point, probably better, and it's a tight trading range, so it's not all that clear. It's 50-50. And you're in the middle of a tight trading range. So the sell zone is up here. Maybe not a great buy above 47. It's a big bar, big risk. Middle of a trading range, 50-50. You're approaching the sell zone of this triangle. So we have a bear trend line. The market seems to be obeying. So probably sellers above, but also buyers below. So 47, it's a signal bar for the bulls, but they might buy below a support zone. And the bears, maybe they sell above 46. So we got a bad, and I don't want to get too deep into this one, but you can see the market obeys the bear trend line in the triangle. We get 49, we get 50, we're testing the trend line. 51, we break out of the bull trend line, testing support once again. This all brings me back to what's the significance of leg 3. It's exhausted, in this case, exhausted bears. Weak bears are selling down here on 51. Why? Because we have a bull trend line that the market is obeying, beginning on 24. You could even say beginning over here, or 25 to 35. And then we tested it and reversed again on 47. Now the range is getting squeezed. We're in a tight range. It's breakout mode, and we're going to break out one way or the other. 50, small breakout. 51, follow through, but still not clearly breaking far below the support, and we're still in this support zone, the buy zone, the support area from the body gap. So not a very strong bear breakout in a trading range in leg 3. And I keep saying in leg 3. Why is leg 3 important? Because the bears who sold, let's say, strong bears who sold above bar 39, they know that traders got trapped up here. There's a stop order, sell below 30, and this is a resistance area. 39 is a bad stop order buy, so chances are if we go above it, we're testing resistance in a trading range. It's a bad stop order buy signal bar. It's probably sellers. 40, even though it's a strong bull trend bar, might be a sell to close bar, and it was. We went outside down. Now the bears who sold here, they know that they just faded a bull breakout, and because of that, it's a trading range. You buy low, sell high, and you scalp. So when we test So some bears will take profits on the close of 41. Others, maybe they get to the 35 high. But either way, if you're selling up here, you're taking quick profits because this rally is also probably going to find buyers below and a second leg up. So the bears who sold up here, strong bears, sell the second push at resistance. They make money. So they're buying back shorts, taking profits. There's another short. You don't have a great buy setup. You have a low to short with an early entry above 44. You could sell on a limit order, look to scalp maybe below 42. You get 46, you scalp out, and that's what bears did. They scalp out again. So strong bears sell here, scalp out. They sell again, they scalp out. 48, much smaller bar compared to 47. Only bar breaking above the past, maybe 6 bars, but testing the bear trend line. So we're losing momentum, we're testing resistance, we're expecting a bull breakout here to fail, or in this case, this is a vacuum test of resistance. It's not really breaking out of the triangle. So bears might sell 48, but if they do, they know they're trading leg 3. 1, 2, 3, leg 3 in a trading range. Now you have bears who sold here, scalped out, sold here, scalped out, sold here, scalped out, or they simply sold here, held through these pullbacks, and then after this one, this was a big enough rally that there's probably buyers below, like I said earlier, and it's leg 3, so you're testing a channel line. Bears who sold anywhere in here probably take profits on 51 when we break below 47. Now we're testing a channel line. And because of the market cycle and the way that markets behave, there's only a 25% chance we break below the channel line. This might be a special case because we're in a trading range. There's a lot of overlapping bars. There's targets below this big sell-off. So fair enough, maybe we do break below here more than 25% of the time. But it's just in general. When you have a bear channel, you buy at the channel line support because most of the time the market reverses up, at least in a minor reversal at that point. So we have this channel line. We have 3 legs down, testing support. Better to buy here. So we drop a little bit lower. We try to break below. As you can see, we're trying to break below the bull trend line and trying to break below the bear channel line. Low probability. And then we get the reversal, bull breakout, and then a bigger follow-through bar. It's small, but that's good for the bulls. 3 legs down and double bottom. So we're getting to what I actually wanted to talk about. Three-bar bull micro channel in a wedge double bottom. Good for the bulls, but 5-bar micro channel probably will get a second leg down. So for the bulls, might be better to look to buy a second reversal up. The bears get their small second leg and they're failing again, or I should say support is holding. And if we use the bar 35 close, we tried to break below, we failed, tried again, bad follow through, going sideways, trying once again. And what's happening here? I see nested wedge double bottoms here. And it might be 1, 2, 3. This is leg 3, but it also could be 1, 2, 3, and 3 subdivides into 2 or 3 legs of its own. So still, I don't think a great area to be selling here because of the bear channel line and the support, the horizontal support levels. And it's a zone, like I said. It's not that the bar 35 close is a magic level. It's just that I think the market is demonstrating that there's a buy zone here. And then we get 60, 61, 62. And this looks like a decent bull breakout. The context is good. I said it's a nested wedge, double bottom, at support, in a trading range. Lots of things going for it. The breakout itself is strong. Uniform size bars, micro gap, very little overlap. Bars closing near their highs. What's the problem here? Well, the bulls only have one close above the bear trend line, and we're coming up to a resistance area. The bar 48 low is probably resistance. So we're rallying to resistance, and this is a lower trading range within a bigger trading range. So this is maybe minor resistance, but either way, you expect at least a minor reversal here. But instead, we got bar 63. And bar 63 is a surprise bar. To me, the market should have at least stalled here at the bar 48 low, should have been resistance, but instead the market broke out far above the bear trend line, far above that horizontal, what should have been resistance line, 48 low, rallied far above it, and now we have a 4-bar bull micro channel in good context, nested double bottom, and even this bull breakout here should get a second leg. This might all be part of a pullback, so this is a really big high 1, high 2. So to me, high probability that 60 through 63 gets a second leg up. And let's look at what happened over the next few bars. Another follow-through bar, another bull bar, good for the bulls, and then some profit taking. We're testing resistance. So here's a stop order above bar 39, trapping traders, reversing down. So looks like some resistance there. But is 65, 66 going to reverse this breakout? Probably not. Looks like a minor reversal. And then look at bar 67. So we have 3 pushes down, 1 pullback, 2 pullback, 3 pushes down. If we looked at a smaller time frame, bar 67 is breaking out below a bear channel line. It's a parabolic wedge, and it's doing what it did down here. Bear channel line, bear breakout of the bear channel line, and then a reversal back up to test the trend line. So at a minimum, on a very minor scale, the market should go back up and test the trend line, but that's probably the bare minimum target for the bulls. Because remember, what's preceding this, before I even get into the target for the bulls, why it's significant that we're getting 3 pushes down to this line. Why did I have this line drawn? Because 48 low should have acted as resistance, but instead we got a bull breakout 63. Surprise. Surprises get second legs. So all the traders who did something reasonable here, like a bear, we get a bad stop order sell below 48, but it leads to a profitable trade. Bulls who bought here got trapped. Bears who did not sell here missed out on a profitable trade. Bulls and bears should have limit orders to sell at the 48 low. But the context is good for the bulls. There's a lot of energy building to the upside, and then we're getting a strong bull breakout. Should have paused here, but 63 broke out. Because of that, all the traders who sold here, whether it's a bull or a bear, now they're trapped. If you're a bull and you sold here, the market still went a fair distance without you. And if you're a bear and you sold here, obviously you're in a losing trade. So the 48 low, which should have been resistance, becomes support. We get 3 pushes down to support. Resistance becomes support when we break out above it, and the market reacts to it. Micro double bottom and a wedge at support, a breakout point, and the bulls get their second leg. I think other factors played into why we got this huge bar 73. For example, it's a trading range day. Bar 1 usually doesn't remain the high or the low of the day in general. If it does, it's usually on trend days or trending trading range days, but this one, we had a triangle and a bull break of the triangle. So this day opened near its high, sold off to its low, but then we got a major reversal back up, and we actually went above bar 1, so that statistic, bar 1 usually does not remain the high or low of the day, held up today, even though it got tested again on 77. Those are my thoughts on kind of just a random day from the past. Some things I found interesting and that I hope are helpful. So thanks everybody for watching, and I hope everyone has a good night.